Well, happy Tuesday, everybody. Stratton Mortgage here, Season 1, Episode 11. We'll start off with our introductions. We're a man down today who wasn't able to make it. But I'm Tom Christie.
Trey Reedy.
John Bauman.
And Bill Seach.
So today's topics, and this is kind of dovetailing with some of the things we've experienced here the past couple of weeks. Why are realtors important for your home search and listing your house, and things that you need to be aware of when dealing with your realtor? And this kind of touched a nerve on me, and you guys probably know this. John, I don't know if you've heard me yet the last few days. I really wanted to touch on this today. Realtors have, that we all need to work together as a team, but at the same time, there's a lot of good realtors out there, and there's some that just don't know what they're doing, nor do they care. And trying to find that right person to list your home or to work with is really important. And people need to do their research. And how many episodes we've said that? Ask your questions, do your research. So I had a client that I was working with that selling their house, closed their loan last Thursday, and I'm helping them trying to review their numbers. Well, typically when you sell your house, they do what's called an early signing, right? So the seller is going to sign their documents before the actual closing on the sale of that house, maybe a couple days in advance, typically. With the CD side, that's how it happens.
Did this all come up because you were doing the sale side and Adam was doing the buy side, or you just saw it? Okay.
Yeah,
sorry to interrupt.
The buyer's agent brought it to our attention of pay attention to these figures here, and that's what you're going to hear here in a second, how it got to this.
Okay.
So this guy had been marketing this particular area. He's known to be a big person in this particular area. Like everybody knows, we get those flyers in the mail. Hey, I just sold your neighbor's house for this. You're always seeing this person's face show up in your mailbox. And that's why not? I mean, they know the area. That's fine. Right. It's completely fine. So, this is the guy they wanted to do. They enjoyed his conversation. Sound like a good guy. Great. We're going to list your house. We're going to make 3%. The buyer's going to make 3%. So there's a 6% brokerage fee on the sale of your house. Totally normal. So again, go back, get to the closing. I'm helping them review these fees and all the costs associated with selling their house. Next thing you know, I'm looking down. I'm seeing, well, it looks like this particular case, it was 6%, but the seller's agent, their listing agent, took 4% of that 6% and then gave the buyer's agent 2%. Now, when he did that, there's a system when these people get these listings in their mailbox, hey, this is a house, meets your criteria, blah, blah, blah. They know if that buyer's agent, or that seller's agent rather, is going to pay that their other agent their 2% commission, 1%, or 3%. So he was only marketing out there saying, if I'm selling this house, I'm only paying any of your clients or your particular agent 2%. I'm keeping the other 4%.
Did he do that on MLS? Is that legal to do that?
Yes, but they don't know that. The sellers did not know he was doing that. So it is legal because he told them there was 6% brokerage fee. But how that brokerage fee was divvied up is where the question should have been asked.
Gotcha.
Well, they did ask, and he told them, we make 3%. Again, it wasn't in writing, but what it was in writing was 6%. So that part was legal. But what these clients did not know was that only a smaller pool of people were seeing their property listed for sale because the agents that saw that this guy was only paying 2% for their clients to buy this home, their people weren't seeing that house.
So in essence, the bidding wasn't even coming into play.
It was not.
Because
they had less eyeballs on that property. I mean, and because of the seller's market, he was willing to roll those dice, knowing that if the house takes one more week longer to sell, he still makes an extra percentage off of this, and no one will know any difference.
What was the loan amount?
$189,000. Well, the sell price ended up being $189,000, but because the people buying their house were only getting the 2%, and the house sat for 2 weeks, the agent, again, in this market, knew that now I have leverage because these sellers now are in contract to buy a house. Now they have to sell. Now you're going to start losing thousands of dollars because now it's desperation mode. Because again, their agent was nowhere to be found to help out with any of this.
Right.
So now there's a 2% seller concessions on top of that for that buyer's agent to make up their extra percentage that he was unwilling to pay because he wanted to keep. So not to mention the house was appraised out for $6,000 more. And again, in this environment right now, to get a house that far below market value, that's just unheard of right now. and it's all because there was less number of people. But it also circles back to why agents are important, because they're the exposure for the sale of your house and can create those bidding wars, which ultimately what you want. And it's all relative. If you list your house for let's simple numbers, say 160, but that agent can get you 165. Well, you just made up your commission, the fees that you have to pay your realtor, because they did your job. They created a bidding war to sell your house for more than what you wanted to get for it, which covered their fees.
Did you check any other of his listings just to be,
Well, I mean, there's only so much time in a day.
Yeah.
Right. And again, I have absolutely zero to benefit from this. I mean, if nothing else, I probably hurt myself by going through and exposing some of these antics. And again, this is the first time I've ever seen this. I presented this in front of a number of realtors, and no one's ever seen that, and every single one said that's completely shady. That's wrong.
Oh,
is it legal? Yes. And is it right? It is not right. These people they lost at least, I would say, at least $5,000 more of a capital gain they could have got from the home as proceeds being used to put down on the next house that was lost out because of the way he structured this to serve his needs best, not his client's needs. He was looking out for his needs, not the client's. And again, an environment knowing the house is going to sell, all he's got to do is type in information, dump it in MLS, and all these realtors get that information. And it's just a matter of algorithms of populating into everybody's emails. So, I mean, what kind of effort is that for data entry?
And just to be clear for the viewers, the people that are looking on MLS, and I guess that would be kind of a...
But viewers can't look on MLS. You have
to have... I know. The other realtors that are searching for houses in that area, they look on there and they say, 2%, and then they shy away from showing that house to that customer because it's only 2%.
Yeah.
At a reduced commission.
Yep.
Most realtors I know don't work at reduced commission because their time's more valuable than that.
Yeah.
So basically, your client revealed that they were in contract with their house. So this guy basically saw it as a target of opportunity, and because they were in contract in another house, and carrying 2 mortgage payments would suck.
Yeah, well, there was a contingency, so they had to sell their house before they could move into the next one. So the people buying their home, the only thing they knew that they were only going to get 2%,
right? So
they knew that much. They weren't getting their typical 3 as a buyer's agent. But B, and you can always see how long a house is set on the market. So, and again, in Columbus environment right now, for something to sit on there for as long as it did, they already knew right away, like, wow, this is not gone yet. And it's again, if you would see the pictures, no one would guess. Like, you would say that house will be gone in a weekend. And I thought it was really strange that it didn't sell as fast as it did. They call and tell me, like, yeah, it still hasn't sold. We had to reduce our price. And again, I'm completely floored. Like, how did this happen?
That's such bull.
And it all had my aha moment when I started seeing these documents. I'm like, this all makes sense now. Why you didn't sell when you did, and why it sat as long as it did.
Under $200,000 sat that long. That's crazy.
Well, it didn't make matters worse. As I'm sitting in there in the closing, on their buys, when they're selling their house, that's when the realtor's supposed to be in there, right? He's the listing agent. He should be in there by their side helping them out. I mean, in today's nature, too, I hear brokers don't even go to closings. We do. We go to all of our closings.
Right.
And that's a rare thing. But realtors are supposedly always there. He was not even in the room. He did not want to be in front of those clients when that notary was going over those figures. He was in the hallway trying to find papers to copy, talking to another agent. He dipped his head. Now, when they closed on the sale of their new home, now he's in there. I mean, actions speak louder than words.
Wow.
And I gave all this information to address this with him. And again, they didn't even get their seller CD until hours before closing on their new house. And there's a reason why he held them getting that seller CD too.
Sure.
Darn well there wasn't a delay in the payoff. There wasn't an issue. It was a great title company they worked with. I've worked with them in the past.
Right.
So it was all situated to work in his favor. And again, us as loan officers, we serve zero purpose. It benefits us in no way, shape, or form at all remotely. But our number one goal is looking out for our clients, whether it's somebody gouging them on homeowners insurance or you gouging them on what somebody else is trying to do within the transaction of what we're trying to help accomplish here. And again, I'm all about people making money, and no one's asking somebody to work for free. But at the same time, you've got to be fair with people.
Within reason.
And transparency and honest.
So that brings me to another point. You say, we go to our closings, and I was sitting in one just this past week, and it turned out it was scheduled at like 3:30. Well, I get there, and the builder This was a deal that I picked up from a bank. The builder was trying to charge him $9,000 in holding costs, $100 a day for 3 months. I'm like, I've only had the loan 30 days, not even. Well, I did pick it up from somewhere else. So I'm like, 9,000, man, that's a lot. So me and the customers are sitting in the lobby and we're talking about it. And he's like, man, I really don't want to pay $9,000. I said, well, hold on, let me go see what I can figure out, you know. So we got the head of the builder on the phone, and he started arguing with her about, you know, hey, this is kind of excessive. I can see paying a little bit. Long story short, being at the closing, we saved the guy $3,000 in 15 minutes. You know what I mean? Just by being there and getting involved.
Yeah, so, and reviewing math, and like you just said. Otherwise, that's a lot of money. I mean, just to
it is.
It's again, to the flip side, that's one realtor. Again, how many loans have we closed? And I've never seen that happen before. So,
right.
But this guy's closing a lot of transactions, and if he's doing that to 5, 6, 7 people, now that's over $10,000 that he's taken, and God only knows how much money has been lost in just some of those other people in that area because of what his antics are. So,
well, shit, that's $1,800, right? Oops. That's $1,800 right on that deal alone. I kind of slipped the word there.
Yeah, you did, and but on that, and again, the contract did say 6%, but how it was put together, how that 6% was divvied up, and then what transpired because the buyer's agent only getting 2%. There's an effect to everything at that point. And
well, so in this market too, a house under $200,000, just so everybody knows, is going in 1 day or 2 days.
Yeah,
tops. So I just had one at $405. My client put an offer in at $405. The list price was $399.5 or whatever. Put it to offer at $405. The other guy bid up to $426. $25,000 almost higher. Mm-hmm. You know what I mean? And obviously he won the bid. But the house was never going to appraise for that.
So and my wife is a realtor, so and that's that antic right there. What you said, it's somebody can go and I'll offer $1 million. Well, what is that worth? I mean, does it have value? Seriously, because if the house appraised out at $400,000, what's your $1 million offer mean? So, but until somebody comes in and says, I'll tell you what, now I'm going to be willing to say, I'll buy it for $400,000, but I'd be willing to pay at least $2,000 over, subjected to a potential short appraisal. Now that's a much stronger offer because if it doesn't, we know it's not going to appraise out $1 million. Right. So now it doesn't appraise out $1 million per your offer. You said you're going to offer this, but now we're back to the drawing table, and it appraises out at $399. But you had one guy over here offering $405. So, but now the guy offering $399 is all of a sudden coming back to you saying, well, it's only appraised out at $399. I said I'd be willing to pay $1 million, but it didn't appraise. So I'm not going to pay that much negative equity. And that is an antic that everybody's using right now to try to put themselves on top of that pile. But the verbiage needs to be in there. If you're somebody who's willing to pay $2,000 over appraised value that might come in short, now all of a sudden that $1 million value offer means nothing because he's not willing to do that. He's just simply throwing a number out there just to look gaudy.
Right.
Unless you have the cash.
Yeah, but again, it needs to be in writing, and that's what they're not doing. They're not putting it in writing. They're just saying, I'll pay you $1 million for this house, knowing that, and that's what agents are doing too. So we'll just say we'll pay $1 million for it, but knowing it's not going to appraise. Same thing there. It's not going to appraise at $426.
Right.
So why even say that? You're and if it comes in $26,000 short at $400,000, is he really going to pay his down payment and then another $26,000 in equity? Most likely not. Otherwise, they would have put it in writing.
Right.
And that happens a lot, and that's why I try to help educate these people too. You're going to go into multiple offer bids in this market right now. It's going to happen.
Yeah.
So knowing how to, and again, back to the realtors, some of them really know what they're doing. A lot of them don't care, and I've had them tell me to my face, I don't care how this all works, just get it done. Like, well, what do you mean you don't care? You're helping somebody purchase their biggest investment. You just told me you don't care. Like, why would you not want to understand how this works?
They should be the first line of defense on helping you
understand,
get what you want. Make sure you're not getting taken advantage of, getting the best savings.
Yeah,
I feel like we should kind of be the second line of defense.
Yeah, and I tell you, buying a home is an emotional transaction. I mean, 99% of the time you go in, it's a feeling of what you feel about that house. Yes, it looks great, but how do you feel about that house too? That's why people stage homes, right? I mean, you're more likely to sell a home at a higher dollar than if the house is vacant when it's staged versus unstaged. So, everybody gets excited and they're hearing what they want to hear about these numbers. They're hearing this, hearing that, and you just kind of go all willy-nilly with what this person says, and they might not be looking out for your best interest. So if you don't do your research and just go along with what they're telling you, you could be up for a very big disappointment and cost yourself thousands and thousands of dollars. I just watched it happen.
Right. John, were you going to say something there?
Yeah, I've also seen, like, on the flip side of the coin, like realtors that are really good at doing their job. They actually like record a video of the family, to show that, hey, we've got kids. We like the elementary school. This fits to what we have. The school program has some special program for dyslexia. You know what I mean? So that's why this house is such a good fit. And sometimes the little extras, when they add up and they do things like that, even though somebody's offer might be gaudy or beyond that, they go with the person.
Oh, you're right. Like even those letters, I'd happen to be for a client in Lancaster. And again, person selling their home is very attached to that home. They have memories, they have lifestyle, like little tabs, if you will, or like measurables, like milestones. Exactly, that's where I was looking for. Trey, thank you. So they don't want somebody going there is like, oh, this guy's going to just destroy this home. They want to know that my first house I sold, I still drive by and look at, like, man, look, they just let the garden go, like, and I know how much work I put into that house to get it where it was. When I see all those weeds, it's disheartening to me. So to your point, John, exactly, the letter saying like, oh, we just look forward to raising our family here, right. Like, and then that person was like, hey, I can see this they're going to take care of this home, they're going to make it even better than what I could. And she took their offer being $1,000 less over somebody else because of her letter, and she even drew flowers on the letter. Like I remember to this day. And then I was like, it worked in that occasion. So I mean, it can't not hurt,
right?
So to your point, I share that suggestion. Just I've never done the video aspect of it. That's a good idea. Today's technology.
Now that's high tech, right?
Yeah, I mean but I've always suggested doing that. What you said, do a letter and say, hey, here's why I would love to start my family here, or get this chapter of my life started in this particular property. And we've been seeing here for the last couple minutes, banging on and again, not realtors, but a couple bad realtors. But the problem is when you have a couple bad apples, it gives the industry as a whole a black eye. And when a couple people do something bad, everyone's looked upon in that light, and to us, even that nature, when brokers, for the longest time were looked at as bad people. Now today, everybody's like, well, that's where it is. Like everybody wants to put the broker behind their name now, because now retail banks are looked at as they're taking advantage of people, and some of these correspondent lenders. But there are plenty of great realtors out there. I mean, there is way more good realtors than bad. So you need a realtor today. They help protect you, making sure that residential property disclosures, because people will lie to sell a property. I mean, we've seen that even. But a realtor is going to protect you in that manner. But you've got to do your due diligence. You can't. Don't drink the Kool-Aid. Ask for, if you know somebody, to start getting referrals for those kind of things. And do your due diligence. Ask questions. If your neighbor used this realtor, how was your experience? How did they tell you this, and did they deliver? And again, back to this. This client even left her job, or left her work early to go let an appraiser in because this guy was unwilling to go and let the appraiser in. I mean, come on.
Right. I
mean, he made an absurd amount of money, and he did nothing.
Did they ask him about the fee at all at closing? Did they bring it up?
No, he wasn't in the room.
Oh.
Yeah, and they asked him about it over the phone, and he said his extra percentage that he makes off of this deal was to pay for his marketing.
Well, I mean, and then they have these people sometimes that have like really huge teams where the owner of the team is real good, but the person that you end up dealing with was 6 months ago serving cheesy bread at Little Caesars.
Yeah.
I mean, but you're 98% of your time is spent with the college kid.
Yeah.
And 0.02% is spent with the person.
Yeah.
And it's on that business card.
Yeah, I mean, if you're going to go have heart surgery, are you going to have somebody who is 6 months graduated from high school do that?
Yeah.
No. Like I'm going to be doing my research on the person doing heart surgery. I'm going to be under the knife. I'm making sure, like, who else has anybody died under this guy's watch? Right.
Sure.
I mean that's obviously a drastic comparison, but at the same time, this is also the largest investment you'll make. To make no due diligence of research at all is a disjustice to yourself, and you're going to lose money.
Do your homework. You may not have liked to do it in middle school and high school, and if you got a bad grade, you might have got a slap on the wrist from your parents or whatever. But if you don't do your homework now, it's costing you your hard-earned money.
Yeah.
And I've always equated.
And the fee's the same. I mean, you pay the same amount of money for that realtor that's a neophyte than you do for the one that's done like $25 million worth of business.
Yeah. Exactly. I mean, that's because it's a set dollar or percentage, if you will. But in this case, he just finagled how those percentages were divvied up, to suit his interest, and he rolled the dice on the market and on gambled their money is what he did, and it cost they lost money on him gambling their money, thousands of dollars.
Right. And it puts everything into perspective when you look at every hour you're at work, you could be doing something else. Your time is your money and your money is your time, but you're sacrificing your life for every dollar that you make.
Yeah.
And when you look at it in terms of that, the average person is going to be like, well, that's only $1,000. Well, how long did it take you?
Yeah.
How long did you spend at work, away from your family, away from friends,
is that
doing
worth
fun things?
40 hours a week at work right there is what that just cost you. Like, you basically just gave up a vacation week right there.
It's all about perspective.
And that's a great point. When people think about it like that, then that does really put it in perspective. Because again, it's one thing because it takes time to save all that money up and you get your tax refund back. But at the end of the day, it's like that's a great point. Yeah, in this case, that was. I don't even want to. They wouldn't want to know. That.
So, any other deals of the week we got to talk about? Anything else going on? Trey?
I actually did have something to input. Experian is implementing a new system. It's called Experian Boost. It's mainstream, but there's probably not going to be a lot of people seeing help, if you will, in terms of their scores. But anyways, so what they do is you actually sign up and you link your bank account. So whatever bills you pay your cell phone through your checking account, or you pay whatever utility, right? They will actually, once you link your bank account, they will actually use that information almost like an alternative trade line. And they will actually use that information to give your credit score a boost.
Really?
Yeah.
Experian Boost.
Yeah. However, I called about that. I called our place. Okay, so the lady at Advantage Credit, who we use, and we also use Credit Plus still, but she told me on the phone that it is some kind of something 8, like a credit 8 thing. So in other words,
8 score.
Advantage 8. So it doesn't come into play for mortgage draws.
Right. Yet.
So as of right now, like, don't go tell your customer boost this because it ain't gonna work for you.
Right, but it's something to
keep an eye on.
Yeah.
Because it might evolve.
Right, because I was thinking, because the customer I have right now, I got a 602 score. If I get above 620, it's a lot better. I was like, oh, I'll just go boost this thing. I saw the commercial on TV. I called the number, and that's what they told me. So it's not there yet.
Yeah.
You know what I mean?
Yeah.
So that was
something. It's something interesting that a lot of people don't see.
If you're going to buy your car or something else, yeah.
Well, I know they start awarding points on your credit report when your credit card balance is 30% or less of the limit. Mm-hmm. So if you have a credit card that's $10,000, okay, if your credit card balance is $2,999 or less, that's when they start pushing you into the A category.
Yeah.
When you start maxing out your credit card, or
that drags you down.
Right.
Yeah. You actually, the magic numbers are 1 to 19% usage on each individual card, and then the overall of every. So if you've got 10 cards, using 1 to 19% of every single one of those cards, and then all together it'll actually net you the best possible credit score.
And it sounds weird, like it's that somebody with more cards but managing that debt will have a much better credit score than somebody that has maybe only had one credit card and never been late their entire life. And they almost want you to have more debt, but see that you can manage that debt, and that's how you get those higher scores.
Yep.
It's kind of messed up because I've actually been following mine too, and I had a drop of like 14 points, and the reason was because I put a computer on my credit card. That's the only thing I did different.
Mm-hmm.
There's nothing's been late, but it dropped 14 points just from that. It's not above 30%. It's not even above 20%. But one of my realtors said, "Can you pick me up a computer?" I went and set it up and stuff. He gave me the money back, obviously, but I still put it on there for a minute.
Right.
But yeah, 14-point drop for that.
That's what's great too. We have some of these opportunities with these, score advantage and like or what if scenarios to go through, and we've done it before where somebody's had, several credit cards that have no balance on them. Maybe one has higher balance, and we're like, hey, well, we just move money around. So take these cards that have no money on them, use some of this to pay this down, use some of this one to pay that one down, spread out that debt that you have on this one higher one, and boom, you can jump a score like more than what people would think.
Yeah,
Right.
Yeah. You look at it as like glasses of water on a table, and it makes complete sense. If this one's almost spilling over, and you've got none in this one, and none in this one, and half of this one, you equal them out, and that's what they're looking for. Is
Exactly. Yeah.
You're able to. They're looking for jugglers. If you work in a circus, you're probably got a good score.
That's a good way to play it. Like that explanation is actually a really way to start putting that to people. That's the way I talk and over-explain things. Like I could really simplify that and saying it that way right there. That's a good way to do it.
It took me long. I started out in the business doing credit repair, so I've been like working on graphs and charts and explanations to help people understand this because no one really knows. I mean, there's
the math. I mean, the math to build a rocket ship would probably be easier to figure out.
Yeah, the algorithms that they use and the different scoring models and what they take into account. It'll blow your mind.
Yeah, it's funny. Even people like 800, like your credit limits are too high, and they're like, "What does this say this for?" I'm like, "We don't even read that. Like you have an 800 score. You're completely fine."
Right.
Like that. That's like an auto populate on there. So yeah, some of that's even to this day. Like if you ask my dad about credit scores, and he'll get on his soapbox with how credit agencies are.
Oh yeah.
That actually it's kind of a good segue into something because one of the issues that I've kind of been running into with a couple different borrowers is they have no credit score, the non-QM stuff, and most of the time everybody's like, oh well, you need a credit card to get a credit card, and you need to have credit to get credit, but you can't get credit if you don't have credit. It doesn't make any sense. And there's a couple different things that I've actually basically suggested to people where if you don't qualify for a traditional credit card, there are a couple different things you can do. One is the big thing is a secured credit card. You have to have the money to put down sometimes. Depending on which one, I used to suggest that people use a Capital One. I actually went through the entire process of getting a secured credit card so I could walk them through it step by step. So if there was, if they had a question about anything, I can just walk them through it. But one of the main things, we don't get paid for, I think we have to put this disclaimer, we don't get paid for advertising anything. There's a company called Self Lender where they basically, it's a bond that they get. They take out in your name. There's like a small startup fee of like $12 to $15, I think it was. And basically you pay them back monthly, however much you want, to pay off the bond. And then at the end of 12 months, I think, that bond matures and you can cash it out. You get most of your money back, but through the entire 12 months, that payment that you're making each month is actually reporting to all three credit bureaus at the same time. So anyone can get it. As long as you're 18, you don't have to have any credit. You don't, everyone is qualified to do it. And it adds a trade line.
Good trade line to get.
And you get a bunch of money back. So it could be somebody that, I'm looking to buy a house, I'm thinking in the future, maybe next year, you can do this, save some money for your down payment, build your credit score at the same time, build a payment history, and
And to the other end of that, there's even people who have gotten themselves into credit card debt, and it's like they won't do it again, but they're still trying to get a house. You're like, well, you're trying to get some of these things caught up, but you have nothing good reporting. So if you can get something good reporting, you can stop this bleeding here. Right. So that's an avenue there for them to get that. Start something here to give you a safer way to get that good trade line going forward, so you can get credit reestablished again and get yourself in that back in that good position.
Yeah,
true. Yeah. Have you ever heard anything about like people using like health club memberships, car insurance, internet service, cell phone, showing a payment history on those accounts, and then having that measured as well? Because
not measured. I've seen it as an alternate trade line, right, but not as like a way to affect a credit score though.
Right. I've used you can use a cell phone, cable bill, and car insurance for alternate trades. If you don't have any score.
I even used a couple that I'm doing one for. they rent a place from the young lady's mother, and they pay her cash, and there wasn't a trade line there because there was no paper trail. But I found that they have a pet care program that they pay monthly for their dogs through the local veterinary clinic.
Right.
And they were actually able to use that. Yeah, which is, I mean,
it's a form of payment to be able to track. I mean, that's what people want to know is just what's your willingness to pay. And as long as you can prove that, and whether it's, if the credit bureau is saying that you're not, that's what we try to get fixed. If you have nothing there, then at least you have other avenues.
yeah.
Speaking of
Because
dogs,
there's a way to get loans done with no credit scores. We have those options.
Right.
Like, there's a way to get them done.
Speaking of dogs, we might need a special guest presentation coming. Is she around here?
She was. What you got?
She went to sleep. I'd like to see her on screen one time.
Our
Get her
special
up here.
guest is taking a nap somewhere.
There she is. Come on in here. Stand up by Daddy. See if she'll stand up by you, Tom.
Come here. Come here.
Oh, there she is. All right.
Say hello to everybody. Hi, Mishka.
This is our office friend, Mishka, the dog, who likes to chase squirrels out back and come visit us at the office frequently.
The kids love her.
Kids love her.
Everybody
mailman
comes in with a kid. Like, is that puppy here? Is that Bubba here again?
Yeah. The mailman might not like her so much, but that's funny. I start laughing every time she comes to the door. All right. Well, I think that's pretty good for the day, guys. You got anything else, or how about those jackets? Huh? There's about making a little run.
I think we find
Oh
out
my
tonight
gosh,
who we play in round 2. I think.
Nice.
Game 7's tonight.
Well,
Say,
we find out who we play in the second
it's-
round.
Yeah, because it's game. It's the series is tied, isn't it? The Bruins and Toronto game series 3-3. I think so. Yeah,
Last game's tonight, huh? Sweet.
sounds like it. That's game 7 to Toronto or Boston.
All right. Go Jackets.
Yep. All right, guys. Have a great week.
Have a good week. Peace.